This is the new Nokia 7 Plus.
The 68th annual report of the Central Bank of Sri Lanka was presented to Minister of Finance and Mass Media Mangala Samaraweera by the Governor of CBSL, Dr. Indrajit Kumaraswamy, at the Ministry of Finance today. According to the report, the real GDP growth for 2017 decreased to 3.1%, which was below the projections of the government, which was about 5.75%. In 2016, Sri Lanka recorded a growth of 4.5%. In the external sector, however, although earnings from exports increased to the highest levels recorded, the increase in imports, mainly arising from drought-related imports of petroleum and rice, as well as increased importation of gold, caused a wider trade deficit of 11% of GDP. Meanwhile, the overall budget deficit saw an expansion of 5.5% of GDP due to the impact on revenue collection, government spending, as well as rising interest payments. The report also added that the central government debt decreased from 78.8% in 2016 to 77.6% of GDP last year. Meanwhile, the Sri Lankan rupee depreciated against the US dollar by 2% during the year, while the real effective exchange rate indices also depreciated, raising the competitiveness of the currency. According to the central bank, the depreciation of the currency is expected to enable a gradual adjustment of the current account deficit of the balance of payments in the period ahead. The overall balance of the balance of payments recorded a surplus of $2.1 billion last year after 2 years of deficits as a result of significant inflows to the financial account. Speaking at the media briefing today, Central Bank Governor Dr. Indrajit Kumaraswamy was queried on the impact of the depreciating rupee on the country's debt repayment.
I think it's a myth, really, to say that when you depreciate the rupee, external debt liabilities become aggravated. Because you borrow in foreign exchange and you have to pay back in US dollars. When the borrowing is incurred, for accounting purposes, it is recorded in rupees. And when you depreciate the currency, that amount does increase. If there is misalignment between the trend in the market and fundamentals, that the central bank will intervene. Though we don't want to intervene, we want the market to develop, we will intervene. And we feel there is absolutely no reason why there should be volatility in the exchange rate, because our current reserves are at 10 billion. In addition, a further 600 million will come in the next 2-3 months as the last tranche payment on the Hambantota long lease. So with all this flood of money coming into the country, there is absolutely no reason for the rupee to be under pressure. Because we are a heavily indebted country in terms of our foreign debt, because we need to boost our exports to get out of that foreign debt problem, it is important to have a competitive currency. And as a rule of thumb, we would like the real effective exchange rate index to be 100. At the moment, it is just slightly under 100. So the currency is slightly actually undervalued.
We would like to give the market more flexibility and more authority for them to manage the exchange rate rather than central bank going into market and into that. That's why we have tolerated a little more volatility so far. But I think certain level of currency valuation in real terms is good for the overall economy.
The governor also commented on the growth of the economy.
Because growth is relatively low now, not to follow the past practice of loosening policy too much. Now clearly the fact that growth is so low is something that the Monetary Board needs to take into account, particularly because we have a large output gap. One has to be very careful not to create excess demand in the system, which is a mistake we have made again and again. And we should avoid that through reforms and drive good quality growth rather than creating artificially high growth, which is not sustainable.